Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who have subscribed to the channels. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel we focus on a passive income investing strategy by buying stocks in good companies that pay dividends. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible, and it really just boils down to consistently investing and buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks within the portfolio on a minimum of a bi-weekly basis every 2 weeks when I get paid, but I also do large purchases as well if I have extra funds from a bonus or part side job or something like that. I cover all my investments into the portfolio. It is free to see what I'm investing in. I do not have a paid Patreon or any other sort of paid accounts to see what I'm doing. But if you'd like to help the channel, dropping a comment, liking the videos, and subscribing to the channel definitely helps out tremendously. A small YouTube like me, the comments, the likes, that helps, and definitely subscribe and hit that notification bell so you're notified whenever we drop future videos or whenever someone responds to one of your comments. I also have a Webull link that I put in all my descriptions. So if you want to check that out, if you don't already have a Webull link, if you wanted to open one for your brokerage and start your own account, go ahead and use that. You'll get some free stocks. I'll get some free stocks. You don't have to use that. It's just a way that if you wanted to help out the channel, that you could do so as well. I don't really cover a lot of the stuff that I do in my Webull account. Everything I do on this channel is around my dividend growth portfolio. I don't want to lead anyone to invest into speculative stocks, so I do have some other speculative investments that I do, but again, they're more of a gamble, and they are a very small portion of my overall portfolio. As always, I do appreciate you guys stopping by, so let's jump right into the video so we don't waste any more of your time. We are going to do a portfolio update to cover what I bought for the week. We added $2,072 to the portfolio this week, so let's jump in and take a look at what stocks we purchased. So as you can see here, we started out on July 15th. We're going to cover the dividends that were reinvested. This is a new topic that we covered. Here I want to show you how the snowball works. So as you can see here, DTE, which we actually paid out, or which we actually sold out of last month, paid us out $10.92 in its last dividend. So we are no longer in this position. So that's why you're seeing it didn't buy any new shares. It just paid out $10.92, and we added this to the amount that we purchased other stocks in. So you'll see this $10.92 put to work in the next slide. But here are the companies that paid out dividends this week, and then what they were reinvested into. As you can see, U.S. Bancorp paid out $23.30. I have the drip set, so they automatically reinvest in the companies that pay them out. So with the $23.30, it purchased 0.51435 shares of U.S. Bancorp. So that's kind of the portfolio growing on its own now. So again, every time I get a new dividends, I'm going to get over half a share whenever these are paid out by U.S. Bancorp. Similarly, Stag paid out this week. They paid out $10.59. That was automatically reinvested. It picked up 0.35489 shares of Stag Industrial. And USB, if I didn't mention it, USB is in the financial sector, and Stag is a REIT in the real estate sector. Leggett & Platt also paid out, ticker LEG, $50.53 in dividends. And with those shares, it automatically bought back into Leggett & Platt, 1.37272 shares of Leggett & Platt. And Leggett & Platt is in the consumer discretionary sector. And then Store Capital, another REIT, ticker STOR, also paid out $64.90 in dividends. And with those funds, it automatically reinvested back into Store Capital and picked up 2.45183 shares of Store Capital. And then lastly, this past week, Realty Income paid out $14.60 and picked up 0.21102 shares of Realty Income. That's in the REITs and real estate sector as well, ticker O for Realty Income there. So again, as you can see, the snowball is really starting to grow now. Whenever we're picking up 1-2 shares of companies without putting additional funds in, this is the portfolio itself growing over time. automatically reinvesting into these companies, and it will continue to do this whether I add additional funds or not. Anytime these companies pay out, they will buy more shares of the company that paid them out. Now, I am thinking about turning off the drip because some of these companies, most of them are down. Store, Leg, Stag, USB are all down. So I don't mind adding where they're down. But for example, Realty Income is actually up above where I'd like to continue to add to. So even though it's a small amount at $14.60, I could use that in other areas. Like I could have taken this $14.60 and bought more Store, or I could have bought more Leggett and Platt, or more Stag or USB. So I am considering turning it off now that I'm getting a significant amount every year or every week in dividends paid out. As you can see, this week $174.84 was paid out, at least on the 15th anyway. So I could have taken this 174, put it with the funds that I put into the portfolio this week, and bought any number of shares that I wanted to. So that's why I'm potentially going to turn off the dividend reinvestment for a while, just especially while some of these pullbacks are happening. There are some opportunities that I'd love to get into and build out bigger positions in while these dividend stocks are pulling back. Now let's take a look at what we added to the portfolio in new funds. So on, it says July 5th, but it really should say the 18th. On the 18th here, we added $1,263.90. And with those funds, along with the DTE funds, the $10 and some change there, with those funds, we picked up 1 share of 3M Company, ticker MMM. This is in the industrial sector, at $129.58 per share, 1 additional share there. We picked up 5 more shares of Vail, ticker VALE. This is in the material sector, and we picked up those shares at $13.06. Lumen Technologies, we added 7 more shares there, ticker LUMN. This is in the communication sector. We picked up those shares at $10.90. We added 8 more shares of Siboney-Stillwater, also out of the material sector. This is a mining company, so is Vail. 8 more shares there, ticker SBSW at $9.36. We picked up 2 more shares of Leggett and Platt, ticker LEG. So you saw they paid out dividends on the 15th. So we added a little bit to that position, as well as the shares that were added from the automatic dividend reinvesting. And we picked those shares up at $37.30. We added 2 shares to Prudential Financial, ticker PRU, and this is a financial company. And we picked up those shares at $94.28 per share. We picked up 1 more share of LyondellBasell Industries, ticker LYB. This is also out of the material sector. We picked up those shares at $87.66. We picked up 1 share of Union Pacific, ticker UMP. This is out of the industrial sector. This is a railroad company here, and we picked up that 1 share at $211.54. We added 3 shares of Stag Industrial, another one that paid out on the 15th, ticker STAG, at $30.07. And this is a REIT. We picked up 4 more shares of Bank of America. We've really been building out this Bank of America position, ticker BAC, in the financial sector at $32.54 per share. Same with Intel. We're really building out this Intel position. We picked up 2 shares of Intel, ticker INTC. This is in the information technology sector, and we paid $39.01 per share there. And we added 18 shares of Kinross Gold Corp, another one out of the material sector, ticker KGC, another mining company, at $3.17. So I think 3M, Prudential, LyondellBasell, Union Pacific, these were all stocks that I had in my stocks to buy in July watch list. So I am adding everything that I looked at. I think I added everything this week except for Apple that I was looking at for July, along with some others. Siboney-Stillwater, I think, pulled back nicely. KGC, Vail as well. And as you'll see here, I added more to some of these here. So let's look what else we added for the week. On July 21st, so on the 18th we started adding, and then on July 21st, which was Thursday, we added another $808.36. And with those funds, we bought 15 more shares of Siboney-Stillwater, ticker SBSW. This is out of the material sector, again, a mining company, and it dropped below $9 per share. So we added 15 more shares at $8.97. 15 more shares of Vail, that same mining company we saw on the previous slide. We added 15 more shares there, ticker VALE, at $12.46. Zim, we added 8 shares at $49.85, ticker ZIM. This is a shipping company, industrial, out of the industrial sector. And then again, Kinross Gold Corp just seems to be pretty cheap out of the material sector as well. Another mining company, we added 27 shares, ticker KGC at $3.27, building out more of this position as well. So these are the new additions to the portfolio. Let's take a look at the overall portfolio performance and the sector allocation. So as you can see here, currently the total value of the portfolio is sitting at $118,706.97. It's been hovering around this 118,000 range. I am actually down on the overall portfolio about 2%, but we're not really concerned with that. The dividend yield has continued to creep up. It's at 4.862%, and this is the most important part, ladies and gentlemen. Whether the market's up, down, floating sideways, the annual dividend income continues to increase. The portfolio is currently producing $5,772.02, and this continues to grow every week as we add and as the dividends are paid out from the companies within the portfolio and they buy more shares as well. So this will continue to grow. This snowball will get bigger and bigger over time, and that is the whole idea of a dividend growth portfolio. This passive income generated by the portfolio in the form of dividends paid out by companies, and all of these dividends, most of these dividends are growing over time. So that's what we're looking for. And then as far as the overall portfolio allocation, the different sectors, we are sitting at 8.5% in communications, 3.95% of the portfolio is in consumer discretionary, 8.09% is in consumer staples, 9.35% is in energy, 12.28% is in financials. We're at 9.87% in healthcare, 13.38% is in industrials, 12.51% sitting in technology, 6.57% of the portfolio is in materials, 1.66% of the portfolio is in utilities, and 13.85% is in REITs in real estate. Still no ETFs, even though there are some foreign ETFs, emerging market ETFs that I am interested in. Just a lot of the other positions within the portfolio have pulled back significantly, so I want to build those out while they are pulled back and the yields are higher. And that's the idea. Whenever you can buy what you're going to buy anyway on sale, you should do that. You should not run away from the market. It's strange to me how some people freak out whenever stocks drop. If the stock is in a good company that's growing, you shouldn't be afraid to buy it just because it drops. If nothing has changed, if the company is still a good company, if they're not having problems, then you should feel comfortable buying more shares of that company at cheaper prices. The market seems to be, or stock market seems to be, the only place where you have a sale and everyone runs away from the sale. I mean, if you go to any other store where you want to buy something, people actually look for sales, but it's for some reason, again, in the market, people see a stock drop and they think something's wrong. Well, if nothing has changed fundamentally with the business, that's the best time to buy it. So what it does is, especially if they're dividend stocks, they have higher yields at that time, and then it also increases your potential for future returns. Well, that is really all for the video. We won't take up any more of your time. Just wanted to put out a quick portfolio update. I did not put anything in the portfolio last week, so we didn't have one come out last Sunday. So again, annual dividend has grown to $5,772.02, and that is the most important part of the portfolio. And as always, ladies and gentlemen, I appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring that notification bell, subscribe to the channel. Don't forget to drop a comment down below. It really helps a small YouTube channel like mine with the YouTube algorithms. And hit that like button, thumbs up button. And I do personally read and respond to the comments, so I'm always interested to read your questions, suggestions for future topics, opinions, or constructive criticism. Go ahead and drop that all down below in the comment section. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes through those who take a vested interest. Hey, we'll see you next time. Thanks for stopping by, and hope you're having a great weekend. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.